Your investments in silver could be a pawn in an invisible war. Today, we're revealing how sovereign nations are actively weaponizing silver, creating shocking volatility that could make or break your portfolio. Don't let geopolitical maneuvers blindside you. Understand the true drivers behind silver's wild ride before it's too late. Ever wondered why silver prices are so erratic? It's not just about simple supply and demand. Imagine a global chessboard where powerful nations strategically move to control essential resources. And silver, a critical industrial and monetary metal, is the ultimate prize. We're pulling back the curtain on how state-level economic warfare and resource nationalism are directly causing silver's most extreme price swings. Let's start with the concept of resource nationalism. This is when countries with significant silver reserves, like Mexico, Peru, and China, decide to prioritize their own national interests. They might implement policies like increasing taxes on mining companies, imposing export restrictions, or even nationalizing the mines themselves. When a major silver-producing nation tightens its grip, the global supply chain gets squeezed almost instantly. This creates a supply shock, and as basic economics tells us, when supply drops while demand stays constant or rises, prices have nowhere to go but up, and often they do so violently. Now, let's flip the board and look at the demand side, specifically from a strategic national perspective. Major industrial powers like the United States and China are in a race for technological supremacy. Silver is an irreplaceable component in everything from solar panels and electric vehicles to 5G technology and advanced defense systems. To secure their future, these nations aren't just buying silver on the open market. They are building massive strategic stockpiles. This isn't just regular industrial demand. It's a calculated move to ensure they have the resources needed to fuel their economies and military for decades to come. When a superpower decides to significantly increase its strategic reserves, it can create a surge in demand that sends prices soaring. But it gets even more complex. Silver is also a traditional monetary metal, a safe haven asset. During times of geopolitical tension, think trade wars, sanctions, or military conflicts, investors and even central banks flock to precious metals like gold and silver. This flight to safety isn't just driven by individual fear, it's amplified by national policies. For example, if a country faces sanctions that limit its access to the US dollar, it might start accumulating physical silver as a way to conduct international trade and preserve its wealth outside the traditional financial system. These geopolitical flashpoints create massive, unpredictable waves of demand that add another layer of extreme volatility to the silver market. So, what does this all mean for you, the investor? It means you can't just look at mining reports and industrial demand charts anymore. You have to think like a geopolitical strategist. You need to watch for signs of rising resource nationalism in key producing countries. You have to monitor the strategic rivalries between major powers and understand their long-term resource goals. And you must stay aware of global hotspots where conflict could trigger a flight to safety. By understanding this global chessboard, you can begin to anticipate these large-scale movements and navigate silver's volatility instead of being caught off guard by it. The invisible war for resources is very real, and silver is right at the center of the conflict. Thanks for watching. If you found this breakdown insightful, make sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive into the forces shaping our world. See you next time.